What's up, future real estate moguls? I'm Dean, owner of GTA Commercial Brokers. Welcome back to the channel where I make real estate easy to understand. Toronto's industrial real estate market has been on a wild ride, hotter than a Tim Hortons double-double on a Monday morning. For a decade, this market has been booming, but recently, things have been cooling down faster than a Canadian winter. So, what's going on? Is this the end of the real estate empire as we know it? Don't hit the panic button just yet. In this video, we're going to break down exactly why the GTA industrial market is shifting, and more importantly, what it means for you. Whether you're a seasoned investor or just starting out, we're diving deep into the numbers, the trends, and the juicy details you need to know to come out on top. So grab your calculators and your toques because things are about to get interesting. All right, let's get real for a second. After years of ridiculously low vacancy rates and rent increases that would make your jaw drop, the GTA industrial market is finally taking a chill pill. Last quarter, we saw rents drop by 1.2%. That might not seem like a lot, but it's the third straight quarter of decline. Trust me, in the real estate world, that's kind of a big deal. So why the sudden shift? It all boils down to two things: supply and demand. After years of playing catch-up, developers are finally building new industrial spaces faster. Meanwhile, demand isn't exactly skyrocketing like it used to. This means landlords are sweating a little, okay, maybe a lot, because vacancy rates just hit a 9-year high. But don't shed a tear for landlords just yet. On the flip side, tenants are popping bottles, or at least cracking open a few Molson Canadians, because they finally have some leverage in this market. Now, before you think the entire GTA real estate market is going down like a bad poutine, let's break it down sector by sector. First up, we've got industrial real estate, the reigning champ of the GTA. This sector is still holding strong with an average rent of $17.33 per square foot. But even in this hot market, not all spaces are created equal. Older buildings are starting to see price cuts, while those shiny new warehouses are attracting all the attention. Next, we've got the office sector, the sad trombone of the real estate orchestra. Downtown Toronto, once a bustling hub of suits and briefcases, is now facing vacancy rates over 15%. And finally, we have retail, holding steady like your grandma's 1998 Corolla. Neighborhood shops and essential businesses are doing all right, but those big box stores, not so much. It seems online shopping isn't just a trend, it's the new normal. Now, you might be wondering, with all this talk of cooling markets and shifting trends, why are foreign investors still so obsessed with Toronto? Well, my friends, it all boils down to one word: geopolitics. The world is a crazy place right now, and when things get uncertain, investors flock to safe havens. And in the world of real estate, Canada is like the Switzerland: stable, reliable, and maybe a little bit boring. But hold on, there's a plot twist. The US is stepping up its game, offering juicy tax breaks and incentives to lure investors south of the border. So, will Toronto's market survive? In short, yes. Toronto's fundamentals are strong, and its long-term growth potential is undeniable. But investors are getting pickier. Think last-mile warehouses, strategically located for e-commerce domination, and mixed-use properties that offer the best of all worlds. All right, enough with the market analysis. Let's get down to brass tacks. Whether you're a landlord, a tenant, or an investor, I'm about to drop some knowledge that will help you navigate this shifting market like a pro. Landlords, it's time to swallow your pride and ditch the my way or the highway attitude. In this market, you need to be competitive. Think free rent months, tenant improvement allowances, and maybe even throw in some upgraded appliances. Remember, a happy tenant is a long-term tenant. Tenants, this is your moment to shine. With vacancy rates on the rise, you have the power to negotiate like your life depends on it. Don't be afraid to ask for what you want: longer lease terms, lower rent, or even that fancy espresso machine you've been eyeing. And finally, investors, this market is all about playing smart. Forget those overpriced office towers. Instead, focus on infill sites. These are the hidden gems in prime locations that are ripe for development. And remember, diversification is your best friend. Don't put all your eggs in one basket, or you might end up with a real estate omelet you weren't expecting. So there you have it, folks. The GTA industrial market isn't crashing. It's just taking a well-deserved breather after a decade of insane growth. By 2026, experts predict things will stabilize. But until then, it's all about playing smart, adapting to the changes, and making informed decisions. If this video saved you from a bad real estate decision or you just enjoyed the show, smash that like button. It helps more than you think. Comment below your insights. Do not be afraid to ask. If you're feeling lost or just want some personalized advice, contact me and my team. I'm always down to talk real estate. See you in the next video. Bottom line, the GTA industrial market isn't crashing, it's just catching its breath.